a lot of talk recently in the market about eBay potentially divesting PayPal, maybe in an IPO again. And I wanted to know, kind of, because you know the company better than anyone else, should eBay spin PayPal out?
At some point, PayPal, and by at some point I mean in like the next 18 months for sure, or earlier, PayPal volume will outstrip eBay's. So for all intents and purposes, eBay will be a division of PayPal. So either PayPal spins eBay in, becomes a trading stock, PayPal gets spun out, some other deal happens. eBay remains a key market for PayPal, but ultimately it's the faster growing of the two. So whatever happens, PayPal must receive its full managerial attention.
There's been a lot of talk about the bubble recently. People say we're in a bubble, we're not. But I think generally speaking, there's been a rise in asset prices over the last 12 to 18 months that has been somewhat scary. Do you see a correction in the public markets, say, the next 12 months?
Hard to tell about the public markets because they're so beholden to global forces that are well outside the valley. So any sort of a attempt to predict our own little tempest in a teacup is silly. At a macro level, we live in an extremely uncertain time. There's at any given time 2 or 3 major macroeconomic impacting conflicts that have nothing to do with Silicon Valley, to boot Russia, Ukraine, Israel, Gaza, Syria, ISIS. You know, there's a long list of things being very scary.
On the private side, in Silicon Valley, will we see a correction in the price of companies in the next 12 months?
Selectively, yes. I think there's a bunch of companies that are solving profoundly important big deal problems where the market is pricing them, or the venture capital market is pricing them at the very least optimistically but correctly around the kind of impact that might have. There's a bunch of other companies that are not solving big problems that are riding the coattails of those valuations. I think those will get slapped down.
And those companies are?
It's, you know who you are.
But on the negative side, those companies that are not as transformative, they're not as impactful, do you see them getting a whack in the next 12 months as they try to raise more money?
I think they're going to find themselves having a hard time raising money as the actual value proposition at the revenue level or the market size level becomes more transparent. So Series C, Series A, relatively easy. Series B, I want Affirm to be used by hundreds of millions of people long after I'm done or gone, and that would be a success. I don't really care what it sells for. To be honest, I don't really care to sell it.
So you don't really care the price you'll get for it in the end?
I don't want to put a dollar figure on it. I want to put number of, hopefully, hundreds of millions of users on the product.
We've been talking about Affirm a little bit, but I don't think people really know what it is. I mean, people know you, but not the product. So give us a quick rundown about how it works and what it does.
So Affirm is an attempt to completely reinvent consumer banking and ultimately, hopefully, small business banking as well. We started with credit because one of the observations that I made, even right around PayPal times, was that internet was peeling off complexity and lack of information from just about every industry. And finance 10 years ago was really hard to figure out and really not transparent. So I said, well, what if we provided a really amazing alternative? What it would be transparent, clean, simple.
But Affirm is short-term consumer credit to make purchases at a point of sale.
That is exactly right.
Okay.
That's what it is today. It ultimately expands into all kinds of interesting services. We price every loan to the transaction, to the person, to the merchant. These loans are not compounding interest. It's a straight line, so you know exactly what you're borrowing and what the payment will be each month. So the transparency part is probably as much.
Do consumers really want you to vet their credit every time they want to buy something? I mean, that sounds like a pretty unfun process to me.
It takes less than a half a second, so they can't really, they're not encumbered.
How can you do that, though? How can you look at me, my entire profile in life, in less than half a second and decide what rate you should charge me? That feels kind of like a quick glance.
Well, so long as the rate I can charge you is really good for you, it's probably not a kind of quick glance that you don't like, but we're pretty good at it. We connect to a whole bunch of databases. We've built out a bunch of really good models that forecast your ability to repay and your propensity and interest, in fact, to repay us. So it's a lot of the same sort of math that we did at PayPal, trying to figure out who's a good guy, who's a bad guy.
So what are the signals you look for? I mean, your algorithm, it sounds interesting, but I don't think people understand how it works.
The way we figure out who they are and how they are is on a bunch of several interesting ways. The most important thing that's probably true of today's millennial generation, their social security number has been replaced with their mobile number. Your mobile number is kind of a key an index into a whole bunch of really interesting public databases. So anything from your social media to your phone bill is a really good way of figuring out who you are, what sort of income you have, what sort of debt you're likely to take on and be able to service. And debt to income ratio is one of the best financial metrics that we can use to figure out how likely you are to be able to take care of this loan.